Hey traders, Philip Tigerson here from Stock Market Strategy. Before I start, I just want to say that trading involves risk and hard work, so please do your own due diligence before trading for real money. Today I'm going to talk about flags and pennants. I'll explain the requirements for these chart patterns and how to spot them. Furthermore, I'll explain the psychology behind the patterns and then show you how to trade the flag and the pennant. If you go to our website www.stock-market-strategy.com, you will find a tab called Education, Chart Patterns and Flag and Pennants. Here you will find a written summary including 4 charts, 2 showing you the requirements for these 2 patterns and 2 other charts showing you how to trade the patterns. Flags and pennants are continuation patterns, meaning we'll be looking to trade in the direction of an already established trend. Flags and pennants are real-time tools, whereas an indicator is lacking. This is one of the reasons that makes these patterns widely used. Another reason for their popularity is that they're easy to spot. Flags and pennants don't look alike, but they're traded almost identically. Here are the requirements for the flag. I'll show the requirements for the pennant later. First, we need an established trend. This is because the flag is a continuation pattern, so it needs a prior trend to continue. Second, we need a sharp move, like here. Third, we need the flag pole, this one. Number 4, which is decreasing volume. This is not a must, but more often than not will you see descending volume inside the flag. 5, support trend line, and 6, resistance trend line is what makes up the flag. Number 7, which is very important, because it's only when we get the breakout of the flag is the flag confirmed. It is very normal to see at the breakout increased volume, which is happening here. Okay, you now know the requirements for the flags. Here are the requirements for the pennants. I won't go through the same again because it's the exact same requirements. I just want to show you the shape of the pennant. This one here. The difference is that in the flag we've got 2 parallel trend lines. Here the lines are not parallel. They are more forming a symmetrical triangle. There's a difference between the flag and the pennant, but otherwise it's the same requirements. I like these patterns because I understand why they work. They use the psychology in trading because you can see when other traders are in emotional and financial pain. Here's an example. We got the low of the flag over here. We then form this high low. Many traders will believe that this could be the end of the downtrend, so we can start getting a new uptrend. Then when we form this higher high compared to this high, it looks like the downtrend has reversed to the upside. But then when we close underneath this support trend line over here, it turns out that this new fake uptrend was just a consolidation, a flag to the downside. People are now losing money, and they're also feeling the emotional pain of being wrong. This adds to the selling pressure, and this is the reason why this flag pattern works. This flag pattern feeds on losing traders. Okay, you now know the requirements for this pattern, and you also know why it works. It uses the psychology in trading. So now let's look at the entries. The first one is when we get the confirmation that it's a flag. It's when it closes below the support trend line. This one here, this close. The second one, you have a little bit more evidence and confirmation, and also a little bit more financial pain, because it takes out the last swing low in the flag, this one over here. So it catches even more traders on the wrong side. The third opportunity is a might miss. It's because the price tends to but doesn't always pull back to the support trend line. So what were support is now resistance. When it comes up to something which is supposed to act as resistance, I like to enter using a bar strategy. I see that this bar opens here, climbs up, hits resistance, and then moves down. It shows that sellers are coming in. But because the close is not all the way down on the bar showing a lot of sellers coming in, I wait for a little bit more evidence, and that is a bar which takes out the low of the bar which showed sellers were coming in. The fourth entry is a late entry, but it's when you have a lot of evidence. It's when it takes out the low of the flag. It happens here. And when it takes out the low of the flag, it can no longer turn out to be a double bottom, for example. Now let me show you how to trade the pennant. It trades the same way as the flag, but here it's a little bit different, but just because the price action are different, not the way you should trade it. Here we get a close above the resistance trend line, the last swing pivot high, and the high of the pattern. All three entries in one, so it's a very powerful entry. Here you see that the might miss trade is actually a miss trade this time, because price doesn't pull back to test the pennant. It simply just climbs, but that's okay. It proved that the pennant was the right trade. This ends today's video. I hope you enjoyed it. Please remember to subscribe to the channel so you don't miss out on future videos.